What is going on YouTube? This is Matt Faircloth from the DeRosa group, and this is a video all about which way multifamily investing is going to go. We're going up, we're going down. Right?
Let's see.
And here to talk about this with you guys. You guys know I'm all over YouTube, all over the DeRosa product. This is my partner in crime, my man, Hervé Francois. Hervé, man, we're going to be jumping into market conversations about real estate, about multifamily, and where it's all going.
Absolutely,
Yeah.
and everyone's trying to figure out exactly so many seas of change, winds of change. Where are things going from here? We're almost a quarter into 2020, 25. People are still trying to figure some things out.
Yeah, so in this video, we're taking you guys to the Best Ever Con, which is literally the best ever conference ever. And at that conference, there is high-end operators, high-end lenders, LP investors, everyone you want to meet. If you're looking to, listen, if you want to go and play patty cake with some other investors at other conferences, fine. You want to hang out with people that are really looking to build their business and grow to the next level, Best Ever Con's where you guys want to be, because there's real operators, real investors, real vendors that are really there, that are making real things happen. So we went to Best Ever Con, and I ran around the room, and I asked people, hey man, bull or bear? Hervé, what's a bull or bear? What are we talking about?
Hey, listen, so a bull is a person who's just optimistic. They're very bullish. They're very excited about the particular industry or the economy, the stock market, whatever you might be talking about, right? Because a bull with its horn, they charge full steam ahead, right?
And they think it's going
and
up,
it's going up,
up.
to the right. A bear hibernates. A bear is a person who's exactly the opposite, right? So they are pessimistic. They are negative on the outlook, on the prospects of the economy, the real estate market, the stock market, and so on and so forth. So they hide underneath their desk. They hibernate. They're scared. They are bearish. They think things going.
You guys stick around to the end because Hervé is a market expert. He's someone I highly respect when it comes to markets, good market, bad market, and he's really watches a lot of the economic indicators on where things are going. So we're gonna keep to the end of this video for Hervé to tell us where he is for bull and bear and give us some nuggets on what we need to be aware of for investing in 2025 and forward. So
Stay tuned.
there's your tease. Stay tuned for that. If you guys like this video, make sure you guys like it with a thumbs up button, click it, and make sure you subscribe to this channel. Now let's head to Best Ever. Jay Moranin, Zen Coast Capital. What do you think? Where's the market going? Give me like bull or bear. You bull or bear on multifamily and why?
I am bull on multifamily because it's what I just learned from Jay during this talk is that right now we're feeling a little bit of pressure because there's a lot of inventory hitting the market, but when that burns off, then everything that we buy now will be stable with a lot of upside.
Nice. Okay.
Yeah.
Jay Parsons just gave a great talk here at Best Ever Con. Cool. Appreciate you, man.
Yes, sir.
Thank you. Hey guys, here with Neial Bawa, Best Ever Con. Neial, bull or bear for multifamily 2025?
I gotta say I'm a bull, but only for Class A assets. I think Bs and Cs are going to have a tough year this year. Next year, I'm an absolute bull for any form of multifamily. So 2026, across the board, bull. 2025, I'm gonna stick with Class A's because there's still a lot of Bs and C inventory to work through. They're getting hit in terms of their occupancy because, the A's, we've all got, 2 months free. And so the A's are pulling from the Bs, so the Bs are pulling from the C's. Occupancy is a real challenge. I think it stays a real challenge. The good part, the part that I'm an absolute 100% mega bull on, is the United States is going to have a very strong rent growth year. We've had 2 successive years of low rent growth. 1 year was slightly negative, 1 year was slightly positive. That is not going to happen this year. We absorbed a shockingly large number of apartments in 2024, right? Just in Q4 alone, we absorbed 155,000 apartments in 1 quarter. If you annualize that, that's 600,000 apartments being absorbed. Now, we built about 600,000 in 2024, so we basically just absorbed what we built. But in 2025, the total delivery in the United States is only 340,000 units. The total absorption is likely to be over 500,000. That's why my belief is 2025, bullish year for rent growth, including some of the Southeast markets that have been hit the hardest. They probably won't have, 3 or 4% rent growth, but the markets that have been negative for 6, 7, 8 quarters, all of those markets are likely to turn positive for rent growth. So if you're chasing, looking at rent growth, I think you're going to feel really, really good in the second half of the year. Maybe not the first half, because there's still some inventory that came in the last year that's still being absorbed in Q1 and still being absorbed in Q2. But by Q3, those guys hit 95%. They drop their 2-month concession to nothing. All of a sudden, the market starts to stabilize. So you may not feel it in the first couple quarters, but I promise pretty much everyone in the industry is going to feel better in Q3 and Q4. And then Q1 next year, it's going to be a different game.
Off to the races. Guys, there's a reason why they call him the real estate mad scientist. Neial, real quick, for people that want to go and grab, we just did an episode for the Best Ever Show, and you mentioned a really great website for people can go and download a lot of the market study data that you have. Where do people go to grab that for free, by the way, to learn more about markets and where Neial thinks things are going?
Yep, multifamilyu.com or Multifamily University is our website. It's a free resource. There's no subscription services at all. The data is there, and it's presented in PowerPoint slides that are about 100-page decks, 90-minute webinars. They're all recorded. They're completely free for you. You never have to buy anything from us. You never have to talk with us. So go in there and look for Real Estate Trends 2025. And you'll notice this presentation is about 90 minutes long. I'm going through about 100 cities in the United States that you might be investing in. I'm going through trends. I'm talking about Class A's and B's and C's and rent growth and cap rates and million other topics that you might be interested in. You can just grab that presentation at multifamilyu.com.
Multifamilyu.com. Thank you, Neial.
Thanks so much.
All right, guys, I'm here with Dallon Schultz, Capitallyst Pro. So, Dallon, what's interesting about you is you're not a syndicator directly, but you serve many, many syndicators, probably one of the biggest service providers for people that need a CRM source for their multifamily assets and investing. So, we're asking a lot of syndicators if they're a bull or a bear, and I'd be curious to hear your thoughts on a bull or a bear for multifamily, because a lot of your clients are maybe telling you back door what they're seeing with regards to growth in investors or investors being a little skittish. So are you, from what you heard from your clients, a bull or a bear, and why?
I'm actually a bull for multifamily, and we're invested passively in some deals ourselves. And currently, right now, there's some challenges that we're working through. But the reason I'm a bull for multifamily, at the end of the day, you're providing a basic human need. You're providing shelter, and with where the market's at, the market's down. Rates are down. You look at your per unit cost, it's down right now. This is the time you want to be getting in. This is the time you want to be buying, especially because there's operators that got in 2 or 3 years ago who are now struggling.
They're feeling it.
And they're feeling it, or their loans are coming due. And so they either need a refinance or they need to do a fire sale and get out of it quick. So I think now's a great opportunity to get in, especially in my personal belief. I'm not trying to get political here. I think with the current administration, I think we will see an uprise in the market, in the economy, especially in real estate and multifamily.
He is a businessman, so
he's a businessman. So I'm definitely bull for multifamily.
Cool. All right. Thank you, guys. Check out Dalton at capitalistpro.com for any CRM needs you guys may have. Thank you, buddy.
Awesome.
Appreciate
Thanks.
you. All right. See ya. Sir Lancelot here. Sir Lancelot, are you a bull or a bear for multifamily for 2025?
Bear.
Why?
I give very big hugs.
So guys, I'm sitting here with a few of my friends here at Best Ever Con, continuing our bull or bear conversation. So first of all, I got my man Julianne Peters. Look, Julie, what is this? I love this.
I have style when you hear it.
It's good to get attention, right? So I'm gonna pick on you first, right? Multifamily, 2025 and maybe like the next year or so after. Are you a bull or a bear? Are we going up? We going down? Where are we going?
I don't think we're going down, okay? I think we're going to be holding steady. I think there is going to be...
You got to pick an animal, Julie.
Listen, I think it's not going to be all that great, quite frankly, okay?
I got her. Okay, so that's a kind
lender, right?
Yeah,
and I do think our numbers are going to go up in the Class A. Okay,
yes.
If you're looking for B's, I think it's gonna be more difficult, and I don't think C's are gonna work. They're just not.
So can I say maybe are you a Class A blue bull? Maybe like a delicate bull? All right.
That's institutional, right? Not a lot of institutional. Right? We're looking for people that are going to have retail investors. That's B and C. I think it's still going to be very challenging. 2000.
And so there's still more distress got to get worked out. So you see a little more bearish going on than bull. All right, cool. Thank you. All right, Bonnie, you got that?
I am cautiously bullish on kind of my asset class, which is more smaller multifamily, small to mid-size multifamily. I think there is opportunity to improve the tired landlord.
Polite bull.
Polite bull.
Okay, cool.
Amazing.
Like commitment.
Nick Moore, corporate attorney, real estate attorney, private equity, all things one-stop shop. I am full bullish. Okay. Here's why. I get to see a whole landscape of everything. Okay. I get to see refis, new acquisitions, sales. Okay. From Q4, things are generally a little bit tight in deal flow. Okay. So Q1's a little bit lighter because the things go under contract in Q4. Okay. This year in Q1, my activity was off the charts because people were active in Q4. So if I'm basing it off of the deal flow that I'm seeing in Q1, I'm encouraged because we're already seeing the Treasury dip a little bit. We're going to see some consistency, I think, with that retrace back to like sub 4 in the Treasury, because we're going to see the tax policy from Trump. We've got thumbs down over here. We have a $1 bet that I'm right just now.
Okay.
But I am bullish, I am encouraged, and I'm going to send all of my clients doing the deal flow to Julianne Peterson. Old Capital Lending. This is a non-paid advertisement for Old Capital Lending.
All right, thanks. More to come, guys.
Hey guys, quick break. Hervé, we're all at DeRosa, we're all about transforming lives through real estate and all about helping people out. So you developed a couple of free tools that people can use to pick what markets they want to invest in. Just a quick pause before you guys get back to bull and bear conversations. A lot more coming down the pipe on this, but I want you guys to hear real quick about Hervé's 2 tools that you guys have for free by going to DeRosaGroup.com/tools to grab a free copy of these. Hervé, what do they got? You got Market Hunter tool, right?
We got the Market Hunter tool and we got the secondary market tool, all right?
Yep.
And the reason why we put these tools together, folks, is we want to see you guys succeed. These are tools that we put in place in order to help us think about exactly where we're going to invest, what are some of the metrics, what are some of the variables that we're going to take into consideration that's going to help us decide, is this market a viable and attractive market for us to invest in, to start to invest in, to build and to scale from there. Don't just pick a market because you live there or it's 5 minutes away from your house and so on and so forth.
Because you heard it was a good market, because that's where you think all the other cool kid investors are going.
Exactly.
Like everybody's investing in Austin, so I guess you should invest in Austin too, right? No. Get your data. What I love about the Market Hunter tool is there's clickable links that tell you where to go to get the data that it's asking you to assemble. Population growth, job diversity, all those things. The links are all there. Hervé did all the work for you guys. All you gotta do is just download that tool and click the links that are there, and then you add up the score for each of those metrics for the market. You add it up. Bottom line tells you if it's a good market to invest in or a bad market to invest in.
Exactly.
Go to DeRosaGroup.com/tools and grab a copy of both those free tools for you guys to grab to help you build your business. Now back to the video.
Are you a multifamily right now, bull or bear overall? Like, are we going this way or that way overall in the market?
Bull.
Why?
Because the supply-demand dynamic is going to be shifting in our favor.
We need it.
Yeah, absolutely.
Cool. All right.
Yeah, good job. Yeah.
Here with Angel Williams with purple hair. That is her full name. So, all right. So it's more of a blue these days. So overall, with where's multifamily going? Are you a bull or a bear? We're going up, we're going down. Where are you at? And tell me why.
We are actually pivoting. We have pivoted over into mobile homes. So
What do you mean
I know.
You'll do the self-plug in a second. Are you multifamily bull or bear?
We're pivoting away.
And that means, I know what that means. That means that the party's over. Somebody turn the light switch off. All right.
Things are not going great.
You are a bear of multifamily, which means that you bull on mobile home parks.
On just basically other stuff.
Anything but. So that answers the question. Thank you very much.
Sorry.
On that note, all right, all joking aside, name of your company.
We are Lauren Capital. My husband also has Ironclad Underwriting, and then we also have the Academy Presents Real Estate Investing Rocks, and we've also got Coach with Angel, which is me, and I'm helping.
Coach with Angel with bluish, purplish hair. Awesome.
Thanks.
See ya. Hey guys, I got my man John Cashman here. John, multifamily, right? Where are you at? Where with your sentiment for multifamily right now over the next 12 months? Are you a bull up or a bear down?
So before I answer, I think the first thing is you have to understand all real estate is always local. Same with multifamily. I invest in the Midwest, growing parts of the Midwest, Cincinnati, Louisville, Kentucky, Columbus, and in my market, I'm absolutely bullish. Those markets are seeing great rent growth. We did not see any rent depreciation over that time frame, so I still think that there's solid growth. These are strong markets, and in those markets, they're driven by really recession-resistant industries. So transportation, logistics, healthcare, education, those are what's driving those markets. So I think for the long term, they're going to be sound. They don't go up too high when markets are great. They also don't come down that low when times get bad. So I'm still bullish on multifamily, particularly in the Midwest.
That's a good answer, guys. John Cashman, Cashman Capital. Kept this guy out. Gives a good answer to the bull bear question, man. Appreciate you. Guys, I'm here with my good friend Zasha Smith. Yeah, check her out on Instagram, social media.
Invest with Zasha.
Invest with Zasha. It's social media queen right here. Now, Zasha, multifamily. Next 12 months, are you a bull going up or a bear going down? Where are you at? And tell me why.
I am a bull with the right operators. I think a lot of deals have gone south, and let's be realistic. It's been a challenge the last couple years, and so when you're dealing with the right operators, like here, there's still a lot of people here that are running successful deals in multifamily, in single family, in raising funds for different types of strategies. But I think the most important thing is to stay in the know, stay around the campfire, around people that are actually doing it and are actually successful, have a good track record, even when times are a little bit difficult and challenging. Those are the people that you want to invest with. So I say stay close to the campfire and keep investing.
That's brilliant. Good answer. Invest with Zasha. Check her out. Thank you. Hey guys, I got Bill Leahy, full-time passive investor extraordinaire. Bill, bull, bear, multifamily, next 12 months. What do you think?
I'm a bear right now.
Tell me why.
I'm looking for flight to safety. I'm going to sit on the fence for a little bit while and see which way things go.
Where do you think they're going to go?
I think eventually it's going to be bullish, but there's so much change with the macro, with the new administration, that I'm in a position where I can sit and wait.
Yeah.
So I'll wait.
Too much uncertainty for you, huh?
Too much uncertainty.
Well said. Cool. Bill Leahy, look him up. Cool. Thank you, Bill. Good to see anybody. Hey guys, here at Best Ever Con for more bull or bear conversations. I'm here with the real estate investing OG, Russell Gray. Russell, I'm asking everybody here at this conference if they're a bull or a bear for multifamily in the next 12 to 18 months. Where are you at? You bull or bear? Tell me why.
Yeah, so I think that there's going to be a lot of great things happening, opening up in the economy, so that part's good. I know that I'm partners with Ken McElroy, who's a big-time multifamily investor in the Collective Inner Circle Mastermind. Kenny is very, very aggressive right now. I trust Kenny's judgment. He's got a great track record. He's, I think, put up, as of right now, about $300 million in acquisitions this year. He's targeting $1 billion. So I would have to say, just based on that alone, bullish. On the cautious side, I'd say one thing you need to look out for is if the Trumponomics, if you will, loses control of inflation and loses control of the interest rates, we'll have the same problem we had. If interest rates climb, cap rates compress, and you know that that's very, very difficult. The flip side of that is a very aggressive employment environment where hopefully there will be a lot of jobs created, middle-class jobs created, and the first step out of mom and dad and in formation is to get into apartments and then to move on. So I think there's going to be a lot of opportunity. The other thing is, if manufacturing comes back to the United States, these sleepy little towns that have not had any money put into them for ages are probably going to become revitalized. And in that process of revitalization, there's going to be a chance to buy old assets and bring them back into service, or if you're so inclined to get involved into development to add to the supply in those markets that are probably going to be underserved.
Wow, it's really inspiring, guys. So definitely a bull with good reasons. So thank you, Russell. Thank you. Appreciate it. Let's get some more data, guys. Guys, I got Paul Herbst here from Equity Trust, probably one of the largest self-directed IRA custodians in the U.S., if not the largest, right? So asking people, bull or bear, up, down for multifamily for 2025. Where you at? You bull or bear?
I'm two right here. We're two bulls.
Double bull.
I think we've already hit the bottom. I think we've hit the bottom of the market, and I think it's all up from here.
Congratulations. Check out Equity Trust. It's equitytrust.com. What's the website?
Yeah, trustetc.com.
Trustetc.com. Check them out. Cool. Thanks, buddy.
Thanks, man.
All right, Hervé. Good stuff, man.
Yes,
I'll
sir.
tell you a few tips I like.
Okay.
My man Joe Fairless, right?
Yep.
My man,
Yeah.
mentor. I have a lot of love for Joe. A lot of love for Joe. He said, Housing is a fundamental human need.
Yes,
right?
it is.
And that is why Joe is always a bull on multifamily, because he was like, we need more housing, and it's not anything that's going to go away anytime soon.
That's right.
Probably my biggest tip, and a few other tips here. Tell you what I want you guys to do. Write in the comment section which tip you liked, and tell me in the comment section if you guys are a bull or a bear.
That's right.
Now, Hervé, we did a little tease here. Where are you when it comes to multifamily, right? Where are you with regards to bull or bear on the multifamily market, and why?
Yes. Listen, Matt's a great question. We've heard a lot of different conversations and panel discussions over the past couple of days. Different economists, different investors, people from different walks of life, giving their opinions, giving their thoughts as to where is the market going this year for multifamily investing, and listening to all of that. And again, like you were mentioning, me keeping an eye on a lot of economic data that's come out over the past couple of months, as well as projections and outlooks for the remainder of this year. I am overall, drum roll please, I'm bullish. I am bullish for multifamily for the outlook for 2025, and I'm bullish for a couple of reasons. Now, I am not by any stretch of the imagination saying that things are going to go immediately up to the right with no obstacles and no obstructions
That
whatsoever.
sounds like a speculation.
Yeah, that would be a speculation, right?
Yeah,
So
just go to the casino if that's what you think is going to happen.
listen,
guys.
luckily for us, real estate is very local. So I certainly, when I'm saying yes, I am overall optimistic. I am more optimistic on some markets than I am on other markets, right? So not all markets are am I extremely bullish on versus other markets. For example, markets in the Midwest, I'm very bullish on. If you were to put a barometer, I'm very bullish on the markets in the Midwest for a couple of reasons. Number one, they're still going to be experiencing very solid rent growth in 2025 as they did in 2024 because they're not going to be seeing as much supply of units hitting those markets as in other markets across the U.S. So I'm very bullish on the Midwest markets. I like the pricing, the average rents in the Midwest markets versus, let's say, in the Northeast or in the Sunbelt markets, because on a relative basis, the average rents in the Midwest markets, they're still very attractive. You're talking about closer to $1,000 or $1,100 on average price for rents in the Midwest versus other regions of the United States. And then third, which is a factor that really benefits all the regions across the country, the demand for apartments continue to grow.
Yep.
They continue to grow. Now, that particular factor may be even exacerbated more when you start talking about the Northeast and the Sunbelt markets, where the average price for homes is just continuing to climb higher and higher. Nationwide, average price for a home is now $430,000. Which means that the average mortgage on a home that price is about $3,000 to $3,100 per month, versus about average rents in some of those markets about $1,800 per month. So you still have about a $1,300 variance in regards to average rents versus average mortgage on a home that costs, on average, again, $430,000. So I'm bullish on apartment demand throughout the country. I'm bullish on the Midwest specifically because low supply of units coming on. There is, on a relative basis, a fewer number of units being added to the Northeast and the Sunbelt markets versus 2024. So you're going to start seeing some more absorption and therefore lower vacancy rates this year versus last year. But at the end of the day, when we get to December 2025, there'll still be a shortage of apartment units relative to the demand for apartment units. I think we are going to continue to see the average price of homes continue to increase, even more so in the Northeast as well as the Sunbelt markets. There was some research out today that migration in 2024 topped the highest in the Carolinas, number one, Texas, number two. So that's where I definitely expect to see average home prices go to pick up. That's really what I'm expecting. I'm not even going to go down the path in regards to properties that are in distress or loans that have gotten extended and continue to get extended out.
That's a small percent of the population.
Small percent of the population
Yeah.
overall, 100% overall.
Yeah.
But when you look at the demand factors and you look at the supply factors, you put them all together. This is why I'm bullish on multifamily outlook for 2025.
Love it. And I'm with Hervé for all the reasons. My quick thought is that, as Joe Fairless said, multifamily is a core human need. But in addition to that, we still have a need for housing in this country. The cost to buy versus the cost to rent is still a huge disparity. And so just for that, it's going to push more people towards renting. And I also think that a lot of the younger generations, the millennials and those folks, are a little more geared towards being more nomadic. And maybe are not going to want to just live the old school American dream of buying a house and settling down.
That's right.
And that they might want to be around. It's even Gen Z that is behind the baby boom, behind the millennials. They're going to want to be even more nomadic and maybe want to rent somewhere for a little bit and then move somewhere else and move somewhere else.
To that point, average age of person buying a home today is now 38 years old. That is up from 28 years old just 10 to 12 years ago.
Wow. Okay. That's gonna skew a lot of things.
Absolutely.
So guys, I hope this is a good value add for you guys. Hope you guys got something out of this video. Tell me what you guys thought in the comment sections about this. Make sure you guys grab Hervé's Market Hunter tool and his secondary market tool by going to DeRosaGroup.com/tools. And those things are worth thousands of dollars, but guess what? They're free. So go to DeRosaGroup.com/tools and grab a copy of those, or grab the link in the comment section below. Hervé, always love producing content with you, my man. Thank you.
Here, man.
If you guys like what we do, make sure you guys like this video and subscribe to this channel. Thanks, guys.